As yields fall, markets say yay, or investors say yay. Money is getting cheaper to borrow, which pushes more money into the stock market. And again, if we start to rally up, it then could be a negative for the stock market. All right. So again, these type of setups, high probability, still risky, but high probability, meaning you get towards that 80% success rate. Very, very solid overall. So again, short term, I think it's very clear. We're seeing altcoins starting to rally here. We're seeing Bitcoin rallying. The idea is that it's coming into the inauguration. The hype is getting real.
What's next for the markets? Gareth Soloway dives into his bold predictions for the stock market, revealing what to expect in the coming weeks. With major resistance levels and critical trends at play, Soloway's analysis could change everything. Will we see a massive breakout, or is a pullback looming? Stay tuned to find out.
Follow me over to the big board. Let's take a look at where this market is going to be heading into the final day of the trading week. This is the SPY, which again tracks the S&P. It gives us a good basis to see where the markets are pre-market before the stock market opens. You can see again, this was 4 in the morning. So again, a little bit of a pop, a lot of consolidation. What kind of pattern is this, guys? For those of you that know your technical analysis, that is a bull flag formation. What does it lead us to believe? There should be another move up, and that's exactly what we've gotten here into the late pre-market action. And again, stock market opens in less than 30 minutes. So this is telling us we are setting up for a positive open on this final trading day before a 3-day weekend for the stock market here in the US. All right, couple things. Notice this trend line right here. See this one right here? I'm going to show you on the daily chart of the S&P where that trend line is, because that is what we are hitting right here. And if you look closely, you can see we've kept on trying to pierce it pre-market, and it keeps getting rejected to the downside. So let's go into that and take a look. You can see it right here. All right, this yellow line down sloping here, connecting these highs right through here all the way down. That is where we are currently trading right now. And so again, I'm not saying this level can't be broken through. It very well could be, but that again, you can see on the intraday chart we just looked at, that is where this market is struggling in the pre-market heading into the open. It will also be a level where I watch, do we close above it today when markets close on this Friday, or do we close below it? Below it would obviously be a weaker close going into the long weekend, into the inauguration of Trump as president, and basically into next week's Fed meeting as well. It's going to be a big week next week. Earnings, Fed meeting, and the inauguration. We'll see lots of executive orders by the end of next week, I'm sure, and the markets will probably have a good sense of where tariffs will be on the overall global partners in trade. I want to take a look at the QQQ. In terms of the NASDAQ 100, which is the QQQ right here, if we continue up, the big resistance is going to be here. These two lines will merge somewhere up here as well. So if we continue to rally up, this would be major resistance. Notice how now we're at a point where the markets are below key levels, which tells us that there is resistance that can keep the market from going much higher, and it actually can cause another sell-off. If you look at this chart set up here, the most probable outcome could be a little bit more upside, and then the next leg to the downside. Again, this level right here being the big rejector of current price. Now today, we did see that the stock market is grinding higher. The culprit is very simple here. It is yields going lower. So again, if we look at this chart right here, high pivot, and we tagged it, now you're getting rejected. And again, the beauty of a chart like this is that, and I've gone over this in the previous couple days, is that we can kind of pinpoint where yields will fall to before they hit key support. All right, so where would we expect yields to come down to? Simply take that low pivot there, and it tells us right here. So we have a little bit more to the downside. This will take us to about 4.5%, maybe just below 4.45%, somewhere in that vicinity. That will be this key zone right here, and that would be where we expect a bounce. Now, from that bounce, what we're going to be watching here, and this will be key for the markets, because markets are rallying as yields go down, right? As yields fall, markets say yay, or investors say yay. Money is getting cheaper to borrow, which pushes more money into the stock market. And again, if we start to rally up, it then could be a negative for the stock market. All right. So again, if we hit here and we start to rally all the way back up and tag, let's say 5% on the 10-year, you would obviously anticipate the stock market selling off with that move up in the 10-year yield. All right. So again, this is one of the reasons why most retail investors don't watch the 10-year. It's actually really important. In fact, so important that on an intraday basis, when yields uptick a little bit like this, you'll literally see the the S&P drop like that. I mean, that's how important it is, that inverse relationship that is now tied to the algorithms. All right. Now let's get into a couple movers and shakers today. Intel is rallying higher. Look at this beautiful pop on Intel pre-market. So again, looks like it's up about 7 to 8%. They are basically getting further into the quantum computing side of things. And we know how hot quantum computing is. We know Microsoft earlier in the week basically said, hey, companies need to start prepping for the quantum computing revolution. And Intel is taking that and just running with it and saying, hey, we're getting even more in depth in this. We're going to really pursue it as it is the next frontier. So you got AI, you got robotics, you got quantum computing, amazing stuff on the horizon. But again, valuation does matter when we get to these things, as we saw with Rigetti. When it got to 22, it then collapsed to 6, then it went back to 12, and it's just kind of chopping around. It's trying to find, by the way, its fair value. And this is where, as a trader for myself, I was short up there near 20, and then I went long around 6 and change. And again, we as traders can make money, and I gave, in fact, that Rigetti long level at 6, turned out to make a run of 100% in the stock off that level. All right, now looking at Intel's daily chart, we can see that this stock has been beaten down precipitously, so it is low on the charts, which in general I like, right? I'd much rather buy something at a discount or on sale than higher. I won't chase it as a swing trade now that it's up 7 or 8%, but if it starts to bull flag off this move, that would be an opportunity. There's still a gap around $29 that's very intriguing as well for potential upside.
Gareth Soloway's analysis of the pre-market action shows a bullish flag formation setting the stage for a potential rally. The market is fighting key resistance, with the S&P 500 and NASDAQ battling against downward sloping trend lines. Despite the positive pre-market movement, Soloway warns that this resistance could push the market lower if it can't break through. On top of this, he's keeping a close eye on bond yields. Lower yields have been driving the market up, but once yields rise again, it could lead to a sharp sell-off. Soloway explains how these market conditions could play out, and the question remains, will this rally continue or reverse? Stick with us as we break down the next key levels.
All right, next, I want to talk about two opportunities I see, one long, one short, in the markets right now that have multiple kind of factors that lead me to believe they should both be solid setups or opportunities. The first one we're going to talk about is a stock-specific one. This one is Carvana. Now, Carvana is a beautiful chart, right? It's one of those charts that had been a high flyer in 2021. It almost went bankrupt in basically 2022 to 2023, but it has been on a bull run, getting as high as about $270, and then it had this collapse down here. Now, the beauty of this is, and this is a short trade setup, is that it, from that low pivot right there, it started to rally back. So this is about $175 right down here, and yesterday it hit 238. Now, the beauty of it is, as a technician, I say, okay, number one, what kind of move up is that? That's a 35% rally in the stock in basically 2 weeks. That's a big move. So I start to scope out shortable opportunities, right? I say, okay, well, where could this pull back after a 35% short-term move? And I go to the charts and I say, okay, well, here we have a clear kind of up, down, and then up. And then notice how it kind of did this, hit again before bouncing there, and finally broke down. Now, when you have these two lows that align, you drag that out, and here's your breakdown. This would be your retrace to the scene of the crime, right? That should be resistance. So that's factor number one, okay? Now, if we look at this on a secondary basis, we say, okay, well, now we have a high here, connected here, here, and here, and this line comes right in that same area. That's another trend line. That's factor number two, okay? So we now have two factors, a two-factor trade for a short on Carvana. But the third factor is if you take a Fibonacci and you take that high here, that $270 high approximately, and you bring it down to the low, so right down here to that low, and we stretch it across, what do we know that we hit yesterday? What do we know? If we go over to the big board here, we have very clear, this is your 618 Fibonacci retrace right here as well. All right, now listen, as I always tell you, there's no such thing as a sure thing in trading or investing or swing trading. So for me, this is an area where I start a short position right here, and if it pulls back beautifully, awesome, easy money. But when I'm starting my position right here, I don't go all in because, again, I've learned my lesson the hard way over many, now decades of trading, where it could go a little bit higher. So I have my 786, I have this pivot top, So there'll be levels where if it continues to grind up, I can start to add to that short position and build that core full position. But right now, this is a three-factor trade. And again, that is the thing. Those are the things that I look for as a trader. These type of setups, high probability, still risky, but high probability, meaning you get towards that 80% success rate. Very, very solid overall. So again, in general, what am I expecting on Carvana? Off of this level here, we should see a pullback probably to about the $200 level, maybe just below. You have this upsloping support line, even down at 190. Somewhere in that vicinity would be where I would expect this to come down. Now, the reason why we've seen this big pop up is Hindenburg Research, which had basically called Carvana a Ponzi scheme or a shady, fraudulent company, whatever it may be. They came out and said, hey, we're actually closing up shop. They actually are shutting down. And so my guess is Hindenburg was covering their short on the way up. If they are done doing that, it takes a lot of those buyers away as well, which can add to that seller reemergence to the downside. All right. An interesting little thing there. All right, next up, let's go to Bitcoin, which Bitcoin is rallying to the upside here. The levels are working perfectly right now, and we have to just continue to say that they've worked amazingly well here. So the first things first, right? We knew that this downsloping line here to here was minor resistance. It played out perfectly. What does minor resistance do? And I told you guys this yesterday. You hit it, and you get a little pullback, and then it can break through. That's exactly what minor resistance is. It caused, and I even talked about it yesterday in the game plan. I said, listen, if you're a trader, you can actually play that. If you're more of a swing or longer term, you're not going to play that, right? It's not a big enough short there to get a swing trader out of bed versus a day trader. Sure, you can absolutely play it. Now look at what's happened. We've just gone up to our second minor resistance level right here, right? And sure enough, is Bitcoin stalling there? It sure is. So you'd expect maybe a small check back there as well. Maybe it's intraday today or maybe into the weekend. Obviously, those are minor levels. So there is still a chance that we could rally to the upside, which takes us up to our major resistance, upsloping trend line, double top right here, X marks the spot. That would be the big test for Bitcoin. It's also within that megaphone pattern that I've discussed, right? You have your low supports all down here, and you have your upsloping trend line here that continues kind of all through here to be getting hit. That again would be the major level. So short term, I think it's very clear. We're seeing altcoins starting to rally here. We're seeing Bitcoin rallying. The idea is that it's coming into the inauguration. The hype is getting real. We're as a crypto investors are starting to anticipate major moves by the new administration that are pro-crypto, and I think that's what's driving it up right now. The question will be, as a logical investor, is the crypto market pricing in the best scenario, and do they get less than the best scenario, in which case price would then fall after the inauguration or after a week or two of nothing major happening, or does Trump come through with what a lot of crypto investors are hoping, with some sort of Bitcoin reserve, which has been floated again as a possibility. Whether it's rumor or fact, we will find out in the coming days.
Soloway's insights show just how pivotal this moment is for the market. Whether it's the resistance levels, bond yields, or broader economic shifts, the next few days will reveal a lot. Don't forget to like and subscribe for more expert predictions like Gareth Soloway's. Stay tuned for more.